My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to America. I'll be with my friends, just trying to help you make some money. My job is not just to entertain, but to educate and teach you, so call me at 1-800-743-CNBC or tweet me at Jim Cramer. As long as I've been involved in investing, just years and years, 4 decades, I've almost never heard a good word about a Fed chief. At least not while they're in office, even when they make the market happy. Witness today, where the Dow gained 304 points, S&P jumped 1.46%, Nasdaq surged 2.50%. The grousing is endless about these guys. We might recall Ben Bernanke is the guy who got us out of the financial crisis, but he also helped us get into it. Some remember the Greenspan era fondly, but at the time he was endlessly derided for his impenetrable gobbledygook. Janet Yellen was unremarkable, except for a real gaffe where she mistook transitory inflation for something more embedded. These days, people revere the late Paul Volcker for crushing our last major bout of inflation. But people seem to forget he caused a horrible recession to do it. At the time, he was the most hated man in America. So goes Jay Powell. Today, Powell raised interest rates by a whopping 75 basis points, the biggest hike in nearly 30 years. It was initially greeted with a yawn in the stock market, instant criticism he should have done much more. Stocks briefly sold off. But those sellers made a big mistake, and the market made them look like idiots. Because once Powell started talking in the actual press conference, you realize, wait a second, this man's going full Malcolm X. He's going to stop inflation by any means necessary. Powell will raise rates until inflation's destroyed. He can do it because finally, he played his trump card. He doesn't have to care what happens to the economy in terms of a traditional slowdown. He's not worried about the bane of Fed tightenings, unemployment, because it's so easy to find a job. And without new people coming to the workforce, it might stay that way. The first cohort that realized Powell's now in full Malcolm X mode was actually the bond market, not the stock market. Bond yields came crashing down, came down real hard, which is what was needed because it means the Fed's regaining its credibility with alacrity. Now, as the press conference went on, or wore on, I guess you could say, Powell hedged a bit and said, hey, wait a second, maybe there are already some signs that the economy's slowing. Now, anything that suggests Powell's done anything right when it comes to inflation immediately causes rates to go up and stocks to go down. But, he pushed that aside, and then he said, listen, whatever's happened, it's not enough. He will not let up with the rate hikes until he sees compelling evidence that inflation has been slain. Rates have plummeted for not just 1 month, 2 months, but for a long time. Now, we'll know it'll be difficult for Powell to bring down inflation by himself because a lot of this comes to Russia's invasion of Ukraine, causing energy and food shortages, while China's draconian lockdown policy crimps the supply chain. But as he said, it's not going to be easy. But he'll do it anyway because we have so many more jobs than people available to do so. I think Powell's directly tackling wage inflation first because that's the most powerful tool in his arsenal when it comes to slowing down the economy. In other words, he can't do much about supply. Not in control of that. That's Russia. That's Ukraine. That's China. So he's going to slam demand by throwing people out of work, confident they'll be able to find other jobs for probably lower wages. He wants to take inflation down to 2%. That's a great way to start. He's betting that we can get there without causing a crash landing for the economy because the job market is ridiculously strong. The greatness of Powell's plan is that it totally appeases the inflation hawks who barely needed appeasing because they're taking rates all over the place. Is he taking a huge risk here? I don't think so. But he's so determined to crush inflation that he's perfectly willing to risk causing mass joblessness, even if I don't think that's a likely outcome. Now, there'll be consumers who keep spending, and there'll be consumers who aren't spending because they've lost their jobs. The latter group will still be able to find work, but not instantly, and they're going to help bring down prices. That's how Powell's going to win. Or to put it another way, we're going to see job losses and then a job recovery, but Powell's using the job losses as a lever to stop inflation. He knows the consumer's strong enough to take his blows, but they will not be measured. It's that newfound toughness that allowed stocks to rally today, particularly the growth stocks that had withered because of inflation. We just didn't think Powell was willing to use that layoff lever to tamp down demand. We thought he was a softy. It's a harsh way, but it's really the only across-the-board tool he has to do the job. Oddly, I now expect 2 things to happen. First, many of the people who question Powell's toughness will have to rethink their criticism. I can't recall another Fed chief who straight up admitted that layoffs are necessary, at least not since Volcker. They never put in such stark terms because nobody wants to be a bad guy. But Powell's made it clear that he's willing to be a bad guy, that he can slay inflation even without help from overseas, because he's willing to sacrifice the job market to get the situation under control. If there isn't enough joblessness for Powell's liking, he'll create more at the next Fed meeting. He's counting on a tight job market and a very liquid consumer to help cushion the blow, prevent a hard landing from turning into a crash landing. Can there be a silver lining to this? Yes. Sure, it's possible investors will think that if inflation is going to be beaten, that even if it slows the economy, then they should circle back to the stocks they always buy when that situation occurs, when growth wanes, but inflation wanes too. That's the profitable tech companies that help the enterprise, not the consumer. They shouldn't suffer under Powell's plan because he's putting slack into the system and driving down wages to reduce demand. True to form, tech caught fire. Makes me feel good that we've been buying a lot of for charitable trusts. Sure didn't feel good until today. Oddly, though, some of the consumer stocks, mostly related to travel, went higher. That could be pent-up demand. I think that wanes. But there is one group that should have gone nuts today, a group that should have shot up like a rocket, a group that I want you to buy, a group that didn't get enough love. And I'm talking about the banks. Oh, yeah, they'll take a hit from higher unemployment. Nevertheless, the banks instantly became much more profitable today, and they will every time Powell tightens. And he basically told you he's going to tighten and tighten and tighten. They're going to make fortunes, and the consumer's strong enough that there won't be too many defaults. It's the banks that didn't move. So I think investors went 1 for 2 today. Powell has adopted a Malcolm X philosophy of crushing inflation by any means necessary, regardless of what it does to the job market. Awful if you get laid off, but great if you own tech stocks. On the other hand, the market struck out facing the softball the banks are going to hit into the upper deck. The last thing that Powell said was that potential young home buyers might need a reset about buying a house, as it might be too expensive given their circumstances. I think the Powell bears need a reset and a recalibration. Now they admitted the whole 50 basis point thing was a mistake if that slap upside the head CPI from last Friday. Turns out Powell has claws. Turns out he's got fangs. Turns out he's willing to cause a slowdown. He'll take a recession even. That will be relatively light on job losses. But he'll no longer stand for inflation. Just like Alan Greenspan in 1994, when there were a whole bunch of big rate hikes culminating in a 75 basis point hike. You know what happened in 1994? Here's the chart, courtesy Larry Williams. Remember, we said the rally would start today. Look at this. Turned out to be a pretty darn good buying opportunity, didn't it? It's right here, right there. All I can say to the critics is maybe Powell's as good as all the other Fed chiefs you hated at the time, only to be loved once they retire. And the stock bears? Well, this is not the chart you want to see. I need to go to Jason in South Carolina. Jason.
Jim, first-time caller here, man. Thank you for taking my call.
I am so glad you called. I am glad you called. How can I help?
My question's on inflation.
Yes.
Like most investors, man, I'm watching for capitulation. I mean, to know we're coming out of this bear market, I'm looking for company buybacks to start again. I'm looking for Apple and Microsoft to beat the broader indexes. I'm looking for oil to go back down to $50 a barrel. I'm looking for Bitcoin to stabilize. I'm looking at credit markets, specifically the HYG and TLT to change its course. I'm looking at the VIX to hit sub-40s. But again, my question's on inflation.
Right.
Has it peaked? I mean, with all that being said, why was the market so surprised, by the latest CPI number? I mean, I've heard many analysts.
Well, let's take it, Jason. That number was really horrendous. I mean, I think a lot of people thought that there was a first-level inflation, which was what was caused here. They mistook what's happening in Russia, Ukraine, and China as being a little more benign, and that's what made people wrong. And I'd be careful. I think oil comes roaring back. There's going to be a lot of demand when China reopens. How about Tom in Illinois? Tom.
Jim, thanks for taking my call. And thanks for your resilience in the face of this crazy market.
Well, I'm sure trying. I know that I'm very patient. I'm glad that club members are patient with me. Sometimes it's hard, but it's hard for everybody. I'm the only guy who has to play with an open hand. How can I help?
What do you think of Google at this point?
I did a big deep dive on Google last week. I think it's the cheapest growth stock in America. Right there. Right there. That chart. The cheapest in America. And I mean it. That's the one to buy. Michael in California. Michael.
Hello, I'm Booyah, Jim.
Booyah.
Great show.
What's up?
I bought Amazon after the split, and it's been going down ever since, of course, except today. What are your thoughts on that?
I think Amazon, there was it's true to form as the stock went lower and lower. We got a good piece of research yesterday saying the second half is going to accelerate. Well, we are almost at the second half, so I like Amazon. We did sell a lot of it for the trust, but I think the only one we really didn't sell a lot of, by the way, was Google, just so you know. All right, maybe Powell's as good as all the other Fed chiefs you hated at the time, only to be loved once they retired. On Made Money Tonight, Amid inflation and market volatility, is it time to take a closer look at a stock like Barrick? Yeah, gold stock. I'll give you my take. Then, in this market, it seems almost impossible to find a winning name. So I'm scanning the major indices for some low price to earning stocks that could be worth looking at. Doing this green. And customers love Dutch Bros. But is Wall Street ready to embrace the coffee chain after disappointing earnings guidance? I'm getting the latest from the CEO, so stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.